Now is the time to buy a house. Let's talk about it. Hello everybody, Joe Roper coming at you. And I know if you've been watching this channel, you've heard me say over and over again, you need to wait to buy a house. Now is not the time. It's coming up. What's going to happen is interest rates will slowly start to come back down. The markets will recover. Now is that time. And the reason is, at the last Fed meeting, Powell came out and announced, well, he didn't announce anything specifically. He said he wasn't going to raise interest rates, but there was some subtext to his message. And his message was this: he's done raising interest rates because he believes inflation is going to continue to fall. And before his meeting, he released a note that said he believes that in the next year, there will be 3 interest rate reductions. That means we're going to go from about 5.5 down into the 4s, maybe as low as 4.5. And that is absolutely huge. That means that mortgage rates, which have already started to fall, are going to fall even farther. So why am I telling you that now is the time to buy? Well, it's because when mortgage rates drop into the 5s, into the 4s, the demand to buy houses is going to skyrocket. At the same time, people's money is going to go further, which is going to drive the price of homes up even more. Now, I know there's a lot of people on YouTube out there, they're saying housing is about to fall apart. We're going to see a crash in the housing market. That isn't so. That's not going to happen. What we're going to see is all those people who've wanted to upgrade their house and who've been locked in at a 2 to 3% mortgage. There's no way they were going to sell and get a 7-8% mortgage. And that's where mortgage rates are right now. But when they come down to 4 to 5%, they will be motivated to list those houses. That means there's going to be more houses available, more people willing to buy. And at that point, housing is going to go up. So now's the time. Even if you get it at 7% or 6.5%, it's okay because you're not overpaying for that house. And in 6 months to a year, you could refinance and you could get that house at a great price today and then at a low fixed rate next year. Not only has this been good for houses, and like I said, now's the time to buy, but this has been great for the stock market. We just saw the market finally, all 3 indices, the NASDAQ, the S&P 500, and the Dow, come out of their negative territory from back in December, January of 2022. So now we're positive. So we've had about a 10% run up over the last few weeks because Powell's more than likely done raising interest rates. So now we've caught up to 2 years ago, and now we have to make back the returns that we lost for the last 2 years. You know, when it comes to the markets, when it comes to math, there's always the idea of regression to the mean, reversion to the mean. Things have to go back to averages, back to normals. And that means that we've had 2 years of basically no market returns from December of 2021 until just a few days ago, no returns in the stock market. So that means we have to catch up on those. And the big impetus, the driving force for that next year is going to be when Powell begins lowering interest rates. 3 to 4 rate decreases next year. This is going to be huge for the economy, huge for housing, huge for the stock market. Great time for your wallet. So get your money into the Roth IRAs. It's the end of the year. If you haven't maxed out your 401k, max out your 401k. If you haven't put enough in to get the full match for your 401k, the clock is ticking. You need to get that done before the end of the year to get your full match or to max out on your 401k before the stock market has its great rebound. Like I said, it's back, but I feel next year is going to be epic. If you like videos like this, make sure you check out some of my other videos. Leave a comment down below for an idea for a future video. Hit that subscribe button. And as always, I'll see you next time.